Hey everybody, I hope you're doing well. Today I'm going to be talking about one of my very favorite cryptocurrencies, PancakeSwap's native token Cake, and why, in my opinion, it offers a really fantastic balance between percentage growth, staking returns, and trading opportunities throughout all of the entire cryptocurrency space. Now indeed, Cake is fantastic for growth-minded hodlers. It's generally what I'd like to call soft-pegged to the price of BNB, where you'll find that the price of one Cake is generally around, let's say, 5% of the price of one BNB. And what this means is during any real alt season, Cake will almost certainly join in on the fun ride up. In fact, Bitcoin has kept pace pretty well with Bitcoin. And as I'll explain later on, as DeFi adoption increases, Cake will likely continue to appreciate against Bitcoin, thanks to its staking pool utility on PancakeSwap, and just the reality of how dominant of a player PancakeSwap and the Binance Smart Chain is in the DeFi space. Now, Cake is insane for staking and passive income. The staking APY is consistently above 80%, sometimes above 100%, which puts it roughly an order of magnitude better than the majority of other cryptocurrencies out there for staking. Finally, Cake is great for traders. The relative prices of Cake and BNB tends to oscillate with great volatility during serious altcoin seasons, which, as I'll explain, is partly due to their large difference in market cap and the way that money tends to rotate within the crypto space between the large caps, the mid caps, and the small caps. So, we're looking at high growth, high staking rewards, fairly low DeFi risk. Cake's great for hodling, awesome for passive income, and at times offers fantastic opportunities for traders. What's there not to love? Right, if you find this interesting, please feel free to give me a like and a subscribe, and let's dig in. Alright, so in this video I want to spend a little bit of time discussing 5 related topics. Number 1, why Cake is so damn fantastic for staking. Number 2, why Cake is a reliable growth asset. Number 3, why these two properties kind of make Cake to be like a growth and dividend stock, like in the stock market, except they don't really exist in the stock market. Number 4, how Cake is able to sustain these high APY staking rewards and grow like the best altcoins. Surely there's a catch. And number 5, what's in it for short-term traders? Alright, so starting with staking. Now, Cake has been consistently returning above 80% returns APY throughout this year. At the moment, it is 89%. And during the big bull run in Q2 this year, where DeFi absolutely exploded, Cake was returning between 110 to 150% APY. Really, really fantastic. Now, previously, I have talked about staking on the Binance Smart Chain, which covered Cake. I've also written an article on staking, and one of the nice things about this article is it shows you how to calculate daily returns from staking given an APY. This is going to be important for high APY stakers who want to be pulling out some of their rewards on a regular basis to pay for living expenses, right? So if I give you an APY, how do you work out how much money you're going to be earning daily? Now, if you apply this formula to the current APY that we have for Cake, right, so at the moment, Cake is earning us at a rate of 89% APY, okay, 89% compounded per year, you would work out that your daily returns is roughly 0.175%. Now, what this means is if you stake $10,000 worth of Cake, say, then you're going to be getting roughly $20 worth of staking rewards per day. Right, now I know $10,000 is a lot of money, but bear with me. If you stake $100,000 worth of Cake, I know that's even more money. What that means is you're going to be able to pull out roughly $200 worth of Cake per day. Now, why is that significant? Well, it means for some of you, you won't have to work anymore. You can retire off passive income right now. And this is especially notable because if you wanted something like $200, several $100 worth of passive income per day from investments in the stock market, you would need a dividend stock portfolio approaching something like $1 million, right? So you would need a far, far, far higher amount of principal invested than, say, just $100,000 worth of Cake. And that is because an APY of roughly 90%, 100%, you're not going to see dividend returns anywhere near this much in the stock market, right? An 89% APY is essentially 1 to 2 orders of magnitude better returns than what you get with dividend stocks in the stock market. So $100,000 may seem like a lot of money to be putting into Cake, and I'm not suggesting that you do this, but the reality is having to only invest the principal of about $100,000, in this case worth of Cake, to get several $100s worth of passive income per day, that is quite remarkable. It's not something you're ever going to see in the stock market because dividends for dividend stocks are just not that high. They're lower by 1 to 2 orders of magnitude, right, compared to an APY of around 100%. And as I'll discuss later on, this kind of situation is actually quite remarkable in the crypto space as well, because having an APY this high and having an APY this high consistently is not that common. Often to get high APYs, you need to be doing dual asset staking. So you add liquidity into a pool, for example, Uniswap, PancakeSwap, and then you stake the LP tokens. And the reason why the LP tokens return such high rewards is to offset the additional risks you take on from adding liquidity, such as impermanent loss. But here, this is nothing like that because we're looking at a single asset staking pool. Here, you're simply staking Cake, just one asset, and you're getting roughly 100% returns and consistent returns throughout the year. It really is quite remarkable. Alright, so let's now talk about why I believe Cake is a fantastic growth asset that suits hodling. Now, the story starts by looking at the price of Cake versus Binance Coin. And what we see over the past 6 months or longer is this establishment of this equilibrium between the prices of BNB and Cake, where essentially one BNB can buy you on average 20 Cake, or putting it another way, the price of one Cake is approximately equal to 5% of one BNB. And so the way this plays out is the price of BNB will change over time, but we know that the price of Cake is going to follow alongside in a proportional manner. Right, so it's like the price of Cake is almost kind of soft pegged to the price of BNB, which is quite interesting. Alright, so we've seen that the price of Cake follows the price of BNB, right? But what about the price of BNB? Well, that tends to follow the price of Ethereum, right? We see that on average over time, in the past 6 months, the price of one BNB is roughly about 15% the price of one ETH. And this equilibrium makes more sense because BNB is, people regard this as a quality layer 1 solution, just like Cardano, Solana, Avalanche, and so forth. And so when there's an altcoin season, when Ethereum pumps, then the Ethereum competitors will also tend to pump, and often they pump even stronger than Ethereum itself. So nothing too surprising there. We see that with BNB, it's keeping up with the price of Ethereum. At the moment, one BNB is roughly 15% of an ETH over time. And then finally, what about Ethereum? Well, Ethereum correlates with the price of Bitcoin, right? Ethereum, Bitcoin, they are the number 2 and number 1 cryptocurrencies in the entire space. Generally speaking, we are seeing Ethereum appreciate versus the price of Bitcoin. And so hopefully the message I'm trying to get across might be clear, which is that the price of Cake is actually correlated with the price of Bitcoin, right? Bitcoin does, unfortunately, at this stage of our nascent cryptocurrency adoption, it still carries the market. So that means when Bitcoin's pumping really hard, then certain parts of the market and then later parts of the market are going to be in for good times. And if Bitcoin is dumping, then nobody's going to be in for good times. And what we now know is that when Bitcoin pumps, in other words, when the crypto market essentially is going to be pumping soon, then it's going to carry Cake along with it, which is very important. And if you're still not convinced, then let me show you the price of Cake versus Bitcoin directly. So what we're seeing over the past 6 months or so is that the price of Cake has stabilized to around 0.03 to 0.05% of one Bitcoin. Right, and this matters because we know that everything follows Bitcoin, and if Bitcoin pumps, then Cake is not going to be left behind. So, in summary, Cake is great for long-term hodlers who are focused on growth, and at the same time, Cake returns fantastic staking rewards, an APY that is an order of magnitude above a lot of the other large altcoins out there, like Cardano, Avalanche, Polkadot, so forth. And this brings me to my next point, which is that Cake essentially behaves like a high growth, high dividend stock. Right, so in the stock market, investors often distinguish between growth stocks and dividend stocks. So well-known growth stocks include Tesla, along with the FANG tech companies, Apple, Microsoft, Amazon, Facebook, Google, and Netflix. And these companies pay very little dividend or none at all because they essentially pour all of their profits into innovation and growth, which is why they're called growth stocks. Now, on the other hand, you have dividend stocks. Well-known ones include Johnson, Coca-Cola, McDonald's, and so forth. And these companies have essentially scaled across the world, and they generate reliable and typically large profits, and they tend to have a slower pace of innovation. And so as a result, share prices don't tend to grow much, but shareholders are rewarded for holding the shares with reliable and high dividends. Now, here's the catch. In the stock market, you pretty much never get companies which are both growth and dividend stocks. That would be a contradiction, right? If you're a company, you're either growing or you've stabilized and can afford to pay a good dividend, but not really both, right? But Cake, on the other hand, is the cryptocurrency version of both a growth and a dividend stock. In fact, Cake grows at a pace which puts almost all growth stocks to shame. If we're comparing from the beginning of the year, then Cake has grown a massive almost 5,000%. And in the rally since July 20 alone, Cake has appreciated about 150% since its bottom. And Cake, of course, pays a dividend. And this is in the form of a staking reward. And the rate, as we've discussed already, is essentially 1 to 2 orders of magnitude better than dividend stocks. Right, so Cake returns around 100% per year. Most dividend stocks actually pay only 2 to 5% per year, which is a big difference. Actually, out of interest, in a blog post I made a little while ago on my Medium blog, I showed that an asset that grows at 2% per year, so that would in this case represent dividend stocks, that's going to take more than 110 years to 10 times your money. In contrast, Cake, right, which returns between 90 to 100% per year at the moment, it takes less than 4 years to increase your wealth by an order of magnitude. In other words, 10 times your wealth. Okay, now I want to talk a little bit about why all of this is possible. So what allows Cake to grow alongside the best cryptocurrencies in price, but at the same time continuously pay out such high rewards over such an extended period of time? And overall, it comes down to a magic combination of utility and platform dominance, right? You see, when the crypto markets start pumping, right, then DeFi activities pump up alongside. So what we see here is DeFi summer from last year, but more notably, we see an explosion of DeFi that accompanied Bitcoin's run from breaking all-time highs all the way up to 65k before the correction, right? So when the crypto markets are really pumping, a lot of money is coming into the space, and that includes a lot of retail and institutional investors that are coming in to play within the DeFi space. And what we know is that the utility of the Cake token is strongly tied to various activities throughout DeFi. So if you look at these pools on PancakeSwap, for instance, many of these are new cryptocurrencies launched on the Binance Smart Chain, and you can earn them at a fairly high APY, mind you, through staking. Now, what are you staking? Well, you're staking Cake, right? To earn these tokens here, you're not staking these tokens, you are staking Cake to earn these tokens. So for example, if I want to earn myself some Tron, I'm not going to be buying Tron and staking it here. I'm actually going to be buying Cake, staking my Cake here, and then getting an APR of 70%, which is going to be paid out in the form of Tron, as opposed to Cake. And if I want to earn more Cake, well, I can put that in the auto staking pool or the manual staking pool here. In fact, I recently staked Cake to earn Automata, which is a newly launched altcoin on Binance Labs' launchpad. Now, ATA recently exploded, right? Recently pumped roughly 200%. And until this day, I haven't spent a single cent buying ATA. All of my ATA has come from staking some of my Cake to earn it on PancakeSwap. And so the message here is Cake is bought up in massive quantities to support DeFi activities, right? So PancakeSwap it's the Binance Smart Chain's largest decentralized exchange, right? It's the largest DEX on the Binance Smart Chain. And the Binance Smart Chain became so big in the DeFi season of this year that PancakeSwap actually flipped Uniswap at one point, right? And Uniswap is Ethereum's largest decentralized exchange. And we can see here that DEXs, decentralized exchanges, capture pretty much half of the capital flowing into the DeFi space. So it's not hard to see how tokens for large DEXs such as Cake correlate so strongly with the strength of the DeFi space. And so the bottom line here is when the crypto markets run hot, consumers are going to come in, pour money into DeFi, which means that the Binance Smart Chain and PancakeSwap are going to be part of that action. Alright, now I want to discuss what's in it for traders. If we look at the Cake versus Binance coin valuations, we see that during strong altcoin seasons, there are some pretty strong volatility swings between Cake and BNB. And this is going to be quite attractive. This kind of volatility presents good opportunities for these short-term traders to make a good profit. Now, why do we see these wild swings? Right. And the reason is during strong bull runs, often the large, the mid cap and the small cap altcoins, they're going to pump at different times, right? They're not going to be pumping completely in sync. And that's pretty much exactly because of the crypto money cycle. Once again, basically what's happening is that investors are going to escalate their risk profiles and rotate profits from the large to the mid to the small caps in order to chase continued profits as time goes on. Now, Binance coin, right? BNB, that is clearly a large cap altcoin. It's got an $80 million market cap, right? Which means that it captures almost actually 4% of the entire crypto space. Now, Cake on the other hand, with a market cap of just 5 billion, that is squarely in the mid cap region, right? So mid caps generally refer to cryptocurrencies with a market cap between $1 to $10 billion. So here with a $5 billion market cap, PancakeSwap, right? Cake has a market cap that's around 1/16 of the market cap of Binance coin. So there is quite a large market cap differential between BNB and Cake. And what ends up happening is that even though BNB and Cake were both pumping at the same time, right? So they're both going up as part of the altcoin season. They actually pump at different speeds at different times, where the profits from one rotates into the other, which is why we get these volatility swings. So what we see in early March is that even though both Cake and BNB were pumping pretty hard against the US dollar, BNB was actually appreciating faster than Cake, which is why the Cake BNB valuation was going down. At some point, BNB became overheated, and so investors rotated profits into Cake, which at that point had not pumped as hard, and so we saw the Cake BNB spike up. And then Cake became overheated, and then investors rotated Cake profits back into the safer BNB. And so we saw these volatility swings that continued like this. Now, if you were trading these swings back then, your profits wouldn't have been trivial. The price of Cake appreciated over 80% to the value of Binance coin. So you would have been able to accumulate Cake and Binance coin pretty quickly by trading these swings. You buy Cake here, sell it here for Binance coin, and then sell Binance coin and buy Cake back down here. Right, and this would have allowed you to accumulate Cake and Binance coin pretty quickly. And what's nice as well is that during the phases, during the times where you were holding Cake, you could stake that on PancakeSwap for over 100% APY to grow your Cake even faster. So in conclusion, Cake is just an awesome token, right? And it hits a unicorn sweet spot between growth, staking rewards, and safety. And it can be volatile against other Binance Smart Coin staples like Binance Coin, which means that Cake has a high appeal to investors and traders and passive income enthusiasts and DeFi fans. It's really hard to find tokens like this in the crypto space. Alright guys, that's it for today. Have a great day or night wherever you are, and I'll see you in the next one.